The European Insurance Forum on RIN TV, sponsored by IDA Ireland.
Stephen Cross, thanks for joining us. First of all, how has economic instability across the EU affected your clients?
Economic instability, I would say, it's an after effect, if you would, of the economic financial crisis which we had over the last couple of years. So on the retail client side, it's impacted us in quite a significant way. Obviously, a number of things have gone up and a number of things have gone down. If we think of what's gone down, employee counts have gone down, revenues have gone down, vehicles, property values, cash flow most importantly, and free cash, all gone down. What's gone up? Claims levels have gone up, bad debts have gone up, stress levels have gone up, and insurance pricing has tended to drift upwards as well. So there's a few dynamics going on there. That said, our global client base of Aons around the world, we're in 120 different countries, very diverse base of clients. So for some of our larger clients, it is not a huge impact, particularly multinational. They can ratchet down slightly for their EU exposure and shift their balance of what they're doing to different countries, different denominated currencies. However, for smaller domestic type companies, that can be quite challenging because they don't have the luxury of being able to shift or up sticks or move. So a bit of a difference there in the different type of clients that we have and whether they're multinational or simply national.
After years of relatively flat or even declining insurance prices, the market does appear to be hardening. Will it last, and what do your clients do to manage that increasing cost of risk?
Let's just take a look at the thesis that the market is hardening. Yes, it is in certain lines of business. Certainly for property catastrophe worldwide, that is a problem, and that is increasing. Motor and auto rates for certain European countries are increasing and have been for some time. It's more of a distressed class of business. But overall, not every class is rising. However, I would say we are seeing a strengthening in the market. One of the other issues related to that really is the fact that most classes of business now have to be priced more along the lines of a short tail risk, such as property. So traditionally, long tail pricing has now become almost immediate pricing. So that's posing a challenge and a hardening of the rates. How long will the cycle last for if we get into a hardening cycle? Historically, it was 9 years of soft market, 3 years of hard market. Do I have an opinion? Yeah, I would think that as we look to the future, that cycle and the pressure on rates could continue for slightly longer than normal because of the interest rate environment. How does this impact our clients? For Aon, that's quite a challenging question because of the diversity of clients which we have worldwide. I would say you would expect people to buy less insurance when prices are higher. However, you've now got to look at the economic condition of the world as well. The trouble with it is your overall insurance spend should be down because your employee count is down, your revenues are down, your exposures are down. However, you're really tight for cash, so you can't afford to retain risk or not buy risk, because in the event of a loss, where are you going to pay for the rehabilitation of your firm back to getting up and running again? So it's a bit of a problem. You need to buy the coverage because you can't afford the risk of completely going out of business in the event of something happening. For larger companies, larger global multinational companies, the use of alternative risk transfer, the use of captive insurance companies, that will still continue and will continue to grow. Appropriate use of facultative reinsurance and aggregate stop loss reinsurance sitting behind that is a way to counterbalance the larger retentions a company might take today.
Information data technology, it's fundamentally changed the way that risk is managed. How has Aon leveraged that information to support clients?
This is an area that Aon has invested hugely in the last couple of years. In 2008, we established our Centre for Innovation and Analytics here in Dublin with the help of the IDA locally here. We've now built that up to about 65, 70 staff here. This centre actually houses the Global Risk Insight platform, or commonly known as GRIP. This is the system where we trap all of the trades or the placements that we do around the world. So on an annual basis, Aon sees about $100 billion in our retail space, of $100 billion of retail placements and opportunities to quote around the world globally. That is hugely representative of pretty much most lines of business. So we're a huge believer in data. What we do with that data is sort of twofold. One is we work with our insurance carriers to align their appetite and our clients' appetite so we can better place the risk. So it's much more coordinated fashion. More importantly though, We use this to supplement and complement what our brokers had historically done on gut feel, knowledge and experience, and we're supplementing that with data-based decision making. So we're a huge believer in data, and that is going to continue. That is an area that Aon is going to continue to invest in, fundamental to our business.
How important is Dublin to the global insurance industry, and what makes it so attractive as a domicile?
Well, as an Irishman, I'd have to say that Dublin is a great place to be and a great place to have our business. Why is it important? And, let's examine, is it important in the relative scheme of things if we compare it to London or Bermuda or New York? Yes, it is important. A couple of proof points in that. Firstly, I think about the captive insurance companies that are resident here, and we have a substantial captive insurance company business here. So clearly from our large corporate clients, they view Dublin as a great centre for the captive insurance company vehicles. And many of them have had both direct writing and reinsurance facilities here since the early 90s when Dublin became a captive domicile. So that's one proof point to me. I also, as I look at some of our insurance carrier relationships, which we have, a significant number of those now have their European headquarters based here in Ireland as well. So I think it is most certainly relevant, and I think it is growing. What makes that happen? I guess there's a couple of things. I'd probably pick out 2 or 3 items. First is talent. There clearly is a deep and very rich abundance of talent here across the underwriting side, the claims side, and the financial and accounting side, and more importantly of recent times on the compliance and regulatory side as well. So an abundance of talent which really drives carriers here, because that's where they can very efficiently operate their businesses. Coupled with that, I'd have to say the ability to direct write into Europe is very advantageous, and let's face it, that's what drove a lot of the captive companies here as well. I think overall the regulatory framework of Ireland is pretty good, and it's certainly comparable to other locations. Will Dublin ever displace London as a market? My answer to that will be no, but can it increase in its significance and its stability of what Dublin provides? I think the answer to that is yes.
The main topic of the European Insurance Forum is risk. What changes do you see affecting risk and risk management going forward?
Risk in itself is evolving and changing, and as I would say, there would be 1 or 2 very key areas that are changing. One most certainly is around social media and the risk that social media is bringing to our clients. Everything is captured. News is now old news in 24 seconds. It's all around the world. Social media use, for example, in schooling systems, we've seen cyberbullying. That puts a liability on the schooling system. All sorts of different things are emerging through the use of social media. We see the number of users on Facebook. 36 or 35% of the world is now attached to the internet. That's up from 8% 10 years ago. So a huge focus on open community and social media. That's certainly one thing. Secondly, I would see cyber risk from the view of a number of different aspects actually. One is loss of data, and when you lose data under data protection laws, that's a very significant issue, and that can come from people's flash drives in their computers to people hacking into their systems. We've seen WikiLeaks and the type of activities that they get up to, which is clearly very unhelpful to those that are attacked. Cyber terrorism, another big issue. Those to me are sort of more short-term and very immediate. If I think of risk in the longer term, I suppose I think of the aging of the population. I suppose I think of concentration of risk, and I think of population growth. 3 very significant issues as we look to the future. Failure to innovate is always going to be a risk. As an industry for the last 300 years, or 300-year-old industry, I think that the industry has not really been very innovative on a very regular basis. So if we don't as an industry improve and move with the times and see what is happening, I think that there's enormous risk in that, because somebody will displace the industry as have happened in so many other industries.